Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on January 3rd, 2025.
Happy
Um,
2025.
Happy 2025. Happy New Year, Miles. I'm Ian, for those that are tuning in and not looking at us, just listening to us. Got the recurring guests, Ian and Miles, back on this week after some off and on going through the holidays. We didn't have a consistent kind of podcast release. Wanted to give everyone some time back with their families and stuff. But now we're back in the new year and ready to get back
We're
into it.
back. I trust you had a really good holiday season.
It was good. It was good. Yeah, stayed local. Didn't really go too many places around last couple of weeks. What about yourself?
Yeah, I mean, similar type thing. Had a couple of trips and stuff like to our mountain home, which I've referenced on this podcast before. So that was a lot of fun. I certainly feel like I need a glass of water and maybe a vegetable or two after the last couple of weeks of chocolate and butter and all that good stuff. But
Yeah,
I guess that's what New Year's resolutions are for, right?
right. Exactly. Yeah, I think I'm going on carpets for a little bit. But in coming into moving, right? So I mean, we've thrown a lot in the report. I mean, it's been some pretty interesting movement. I think the last podcast we had, I actually talked to Chuck Fuller
Right.
on, and it's a pretty interesting movement the day after that podcast came out on Friday. I think it was the 18th, if I'm remembering that
Hmm.
correctly. So about 2 weeks ago. And we've seen some near-term participation declines since then. We've seen the market in and of itself, I mean, still kind of hanging around, showed 4 days of losses to kind of start off the Santa Claus rally,
It did
right?
not come down the chimney, it
It
appears.
did not. Yes, Santa decided to bring coals, but I mean, up 23% on the year for the S&P. I mean, we ended the year in a pretty solid footing. From like if you're just looking at the calendar year returns across most asset classes, right? You had small caps up 12%. Yeah, the S&P up more than 20%. Yeah, the Nasdaq up more than 20%. I mean,
Gold,
you
don't forget gold in there
gold.
too.
We'll get to
That was like
that. Yeah,
28%.
but you had a lot of areas that performed pretty well when you just
Right.
look at it from a calendar year performance. A lot of the participation stuff is still kind of moving around, so we won't dive back into that at least for this. But what we wanted to do for this podcast is take a look at a few that kind of wrap up some of the things from what was got the most attention on our site, both from physically attention, what got the most clicks literally last year, what do we felt like should have had the most attention, and then maybe what do we feel like giving attention toward as we look toward the start of 2025.
Sounds like a plan to me.
Think that works out well.
Yeah.
When we're looking at attention, so I mean, there's a variety of different ways you can track that. Obviously, tracking it through flows and price participation. Obviously, stocks going up, you would expect those stocks or representatives going higher to have more attention on them. Um, but I think no one would be surprised when we did a review of what was the most clicked on stocks and ETFs on our research platform in 2024. First of all, I think it's pretty interesting to note we had nearly 6 million clicks, 6 million charts pulled up
Yeah.
just on stocks and ETFs.
You guys are clicking a lot. Let's just throw that out there. We all are clicking and looking at a lot of stuff. So props to you. That is a lot of charts.
Yeah, people definitely still like bringing up the charts, and they like bringing up one chart a lot more than anything else.
Which one?
And that is, of course, NVIDIA.
Yeah.
I think if you look at the symbol cloud at the bottom of the report every
Right.
day, it brings up the basically sorts the tickers by the bigger ones have been brought up more in terms of I think it's top 20. They look down there. NVIDIA is almost always the most clicked on, and you
Right.
saw that reflected over 110,000 chart views, almost double the second place name of Apple, which 65,000 still a lot. But a lot of chart clicks on NVIDIA consistently, and that's been a consistent theme for the past couple of years.
Yeah, I mean, and rightfully so, right? It's been a leader, and then of course at the kind of the back half of the year, you start to see some of the participation wane. So the front half of the year, you're like, okay, well, Nvidia is doing really well. Of course, my clients are talking about it. It's the whole, I mean, it's got a lot of eyes on it. Then you start to see semiconductors and technology roll over a little bit. Now you're starting to look at the chart because you're looking at important points of support. Do we need to rotate out of this position? Do I want to take any gains as we're kind of wrapping up the year? Stuff like that. So I think that there was, a lot of argument for it to be probably number one for the last few years or so. So
Yeah, I mean, NVIDIA up 171% in 2024.
right.
Not bad.
No,
Not
probably
too
not
bad.
bad. I'd take it.
Slightly better than Cocoa, which we'll maybe get to in just a sec. But when we're looking at NVIDIA, I mean, if you're looking at the price move, I threw this, we threw this in the piece on Monday, but actually I had a family friend come up to me over the holidays and was like, "Hey, there's no way NVIDIA keeps going higher, right?" It was the general sentiment of the quote. And I'm like,
Right.
well. typically when someone comes up to you and they're asking about a stock that's up more than 100%, they're as someone not in the financial world,
That's the
right?
top.
That's the top. But I mean, how many times have we said that from the video?
Yeah,
And now this person's saying there's no way it can go higher. Well, like, maybe that means it can.
right.
Right? I mean, that kind of cautious optimism, it could end up being a good thing. We'll see. For Nvidia, I mean, 170% would be great if we got another year of that for Nvidia moving higher. But it did just move back to a buy signal, showing a little bit of return to upside movement, at least to end 2024.
Mhm.
Definitely some clear consolidation around that 140-ish point, though. Be some pretty interesting area to monitor. To your point, if we see that rotation out of semiconductors finally carry over into rotation out of Nvidia, we'll see how that plays out.
Yeah, I mean, you speak about consolidation. You've seen, a lot of the larger Magnificent Seven names. Of course, we can talk about them as other most clicked names: Apple, Amazon, Tesla, Microsoft. Those are all kind of the top five of, not to steal your thunder on that one, but just to
Not right.
look outside of that. You've got the Magnificent Seven, and Ian and I are chartists. Of course, we're going to look at momentum and the charts to let us guide our view. But of course, we're not naive. These stocks are at, all-time valuations. They're massive companies. And so to expect another 170% gain out of Nvidia, of course, that would be pretty crazy. I think I can say, of course, it's not out of the realm of possibilities, but to see these companies get massively large is interesting. I don't know. I didn't say that correctly,
No,
but
but I mean, but the clock resets today, right? I mean,
yeah,
now all of a sudden, when you pull up the chart page, you don't see that 170% starting tomorrow. You're going to see 1%, 1.3%,
that's
right?
true.
And so,
Yeah,
certainly, we're kind of being a little tongue in cheek, not to say that the last 2 years of improvement doesn't matter for NVIDIA.
right.
Most of the charts that we look at, we don't care about when the calendar year ended. But for a lot of people out there, it does play a role. When
Right.
you see something, you don't see that big number associated with it anymore. Maybe that means it has some more tailwinds. Who knows? We'll let the charts kind of dictate that for us.
All right.
When we're looking at the other on the ETF side, though, I thought it was not just big mega cap stuff on the ETF side that got a lot of clicks. I mean, the two that were most interesting to me, I don't know about you, obviously you have Qs up at the top, but you had IWM, small caps,
Right.
were the third most clicked on ETF on our platform, and then gold right behind it
Right.
as the fourth most clicked on ETF. I mean, to your point earlier, gold's had a pretty good run
It had a better
recently.
year than the S&P 500.
Better year, which is not something that can be said all that frequently historically,
No, it
right?
cannot. No.
I mean, the gold, kind of like some other areas, has taken a little bit of a breather over the past couple of weeks. It's
Mhm.
not moving straight higher like it was for the middle 6 months of the year,
Right.
really, which it can be healthy. But yeah, up 26% last year.
Yeah,
Um,
we'll have to see. I mean, you run into a bit of this stuff, and then of course, which we'll talk on in a little bit more. But you have rates creeping higher a little bit. That's going to be a headwind for precious metals, as the opportunity cost of owning or letting those gold bars sit underneath your mattress, whatever it is, that goes up when rates are higher. So we're seeing a little bit of slowdown. Precious metals falls out of the top spot in within the commodity group in Dolly. Interesting to watch, kind of being replaced by agriculture and cocoa and things like that. So definitely a lot. I was actually most interested in by RSP. And of course, that is still the S&P 500, right? And I don't want to not talk about IWM, which is another one you mentioned. But, people are still interested in the average stock as we looked at kind of participation broadening out over the back half of last year. Of course, that kind of fell out of bed in December a little bit, but people are still interested in, at least based on the clicks, based on the average S&P 500 stock, of course, underperforming the cap weighted S&P 500 in
yeah,
2024, but still of interest.
yeah, I think it's. I mean, to your point, a little bit surprising, but not necessarily given all the calls recently of. I mean, I don't think many people were calling for back-to-back 20% years for the S&P. So
Right.
now the theme is not necessarily bearishness, but it's diversification, right? It's broadening out. It's what's going to be up in 2025. Well, maybe we don't get the Mag 7, maybe we get the 493. Maybe we get
Right.
the RSP outperforming the SPY throughout the course of the next year, right? You did some research though that looks at, and maybe we'll get into a little bit, that looks at actually kind of like all-time highs for each of
Mhm.
those moving forward that can kind of show some pretty interesting historical trends, and that you tend to get kind of streaky when you cap weighted or equal weighted is having really good years relative to the other, those tend to come in clusters. Is that kind of fair?
Yeah, we had done the test, and I mean, I'll say this: there's a million ways you can skin a cat on this type of stuff, but the actual study, which we'll throw up on screen, was like a simple rolling count per calendar year of new all-time highs for either the S&P 500 or the S&P 500 equal weighted index. And so in 2024, that spread between the two, the S&P 500 posted 60 new all-time highs, which is great. Its highest number since I think 2021. And then in the S&P 500 equal weighted index posted like 34. So the spread of 26 between the two. That's its widest spread in history dating back to 1990. But to your point, and you talk about streaks, the 2000s, so the lost decade for the cap weighted space, saw a lot, maybe let's just say all of the instances of all new all-time highs. There were more all-time highs for the equal weighted index than the cap weighted index. That flipped on its head when we entered kind of the 2010s and cap weighted's taken over. So, there might be some people out there saying, oh, well, we've seen 2 years of run from this kind of cap weighted space. It's
Hmm.
time for the other 493 to take its space. At least based on this study here, that's not necessarily the case, right? We're seeing preferences for the cap weighted or the equal weighted index. They can lead for quite a while.
Right, right. That is, I think, interesting. I mean, and there are certainly some areas that are showing some improvement, certainly some areas that are showing some weakness. There's been a lot of uncertainty across markets over the past like weeks
Mhm.
worth of trading days, I'd say. But that's kind of why we had the different indicators and stuff to look toward to point us in a direction of kind of what to expect. I mean, we're not going to run through all the other 15 ETS
You
and
sure? We got
15.
time.
We do, but I think there's some others. So in terms of, there's a lot of different stuff that clicked on, some
Right.
surprising stuff in there, some stuff you wouldn't be so surprised about. The small caps was definitely an area that was surprising to see how many times it was clicked on. But I mean, you're looking at IWM was up about 12%. Not as much as other areas, half the performance of the S&P,
Right.
right? But we'll see if that diversification that people are looking toward, obviously the expectation would be that would carry over into the small cap space too. And we need to see some of that, some movement there if we're going to get improvement on some of these participation indicators. If that lags, then that could be you could kind of get maybe a double whammy there, right?
Yeah, and what you're just really looking for is staying power. We've been, for lack of begging for small caps to really pick up over the course of the last 2 years, helping the kind of core of the market move higher, and we just haven't had sustained staying power from small caps. So
Right.
I'll believe it when I see it, when the charts tell me. Until then, it's kind of like every rally, I'm just kind of waiting for the Mike Tyson punch to come out of nowhere and really just bring us back down. But so keep an eye on the charts, but until then, who
Yeah.
knows?
And there are some other interests. So we did that piece on Monday of the most clicked on charts. We followed that up with a piece on Tuesday of maybe what felt like were some of the more noteworthy charts to look toward. Maybe those that weren't clicked on as much, but those that we felt like were pretty noteworthy. I mean, obviously yields in there, 10-year yield, kind of 210 spreads. I think that is definitely top of mind for most investors looking
Mhm.
toward over the next few weeks. You still have the 10-year continuing to climb higher. Now back above levels that it was at prior to the rate cuts, which
Right.
kind of seems a little counterintuitive when you think about it, but that we'll see how that kind of plays out. Yeah, the spreads between twos and tens continue to be more positive. So we had the reversion or normalization,
Right.
I
The
guess,
uninversion,
the uninversion, yeah, normalization that occurred back around the September timeframe.
right.
And then you've seen that continue to climb, which typically the normalization of the yield curve that is actually what's more indicative of a potential weakness.
Right.
And it's obviously an inverted yield curve is not a great sign for an economy, but it usually actually kind of takes effect following the normalization of any potential weakness would take effect after the normalization. Haven't seen that happen
Yeah, I remember
yet.
you and Jamie were talking about this, I
Yeah.
guess when it happened a couple of months ago. Is that right, Jamie?
Yeah, yeah, it would have been back in September. I mean, I think I mean, this is one of those indicators, if you could call it that. The inverted yield curve, I think, is predicted like 22 of the last six recessions or something, right? I
Right.
mean, it's wrong more often, but it's always been kind of right preceding a recession.
Right.
The one that's kind of questionable was that you did get a brief inversion in 2019. Obviously, we had a recession in 2020. Was that recession caused by the pandemic, or was it caused by the inverted yield curve? I guess we'll leave that up for determination, right?
Right.
But I think it's been 3 months now since he had that normalization take effect, and we've seen the yields continue to become more positive, get up 25 bips. Um, that'll be a pretty interesting thing to see. I mean, it's always the, hey, this has happened every time until it doesn't happen
Right.
every time, right?
Right.
But there's definitely some concerns from some out there. So that would be pretty interesting to see how that continues to develop as we move through 2025.
Yeah, no, I mean, I agree with you. I mean, plenty of stuff. Of course, you move elsewhere. We talked about gold and just kind of moving through the report that we put out there. Gold, cocoa there with, it's really strong, strong year or coca, I suppose, whichever it is, who knows. But um, it's has a really strong year as it's moved up higher, everything like that, kind of alternatives and or commodities in general moving higher. And
Yeah, cocoa outperforming Bitcoin.
yeah, that's probably was not on the bingo card.
Would not have expected, wouldn't have thought that to be accurate up until I read this piece. Um, yeah, I mean that is not great for candy prices as we look into 2020. I guess it's good for the New Year's resolutions though,
I
right?
suppose, yeah.
You
Because
know,
oh, why'd you stop eating candy? Oh, I just can't afford it.
because it was up 175%. Yeah. Would you like a meal or a candy bar? Yeah, I mean, there's a lot of interesting charts and kind of stuff to look toward. I mean, on the cocoa front, especially coffee is another area that's done pretty well recently. You just had agriculture move up into the top kind of subset ranking of our commodities asset class in the Dolly asset class breakdown, right? And now commodities and international equities are just one signal away from each other. So international's taken a lot on the taking a lot of heat recently from continued ascent in the dollar. I think
Right.
is dampening a lot of improvement in international equities or potential improvement. You have, I mean, who knows what's going on in China these days with the rally that was supposed to come back into place there is not kind of panning out as a lot might have expected. And so now you have international equities moving lower in relative strength, commodities led by a lot of improvement from agriculture, seeing improvement in relative strength ranking. Maybe we'll have an overtake there
Right.
with commodities moving up in the second position. Yeah, a lot to kind of keep an eye on there as we move through start
Yeah,
of the
and
year.
but you'd think, I mean, the US dollar is going to be a headwind for international equities, but also commodities in general, right? As US
Typically,
denominated
right?
commodities, are face some headwinds there. So, of course, I mean, something to monitor in terms of the dollar and its strength. Of course, conversationally, it makes plenty of sense for both of them to be affected, but it seems like that's taking hold a little bit more on the international equities side of
Yeah,
things and within commodities.
yeah,
So,
yeah,
at least for now.
exactly. Yeah, it seems to be the case for now. So I mean, obviously a lot of different stuff we could have thrown in there for 2024. A lot of price movement moving around. We just pulled the charts that you all clicked on the most are pretty self-explanatory. The ones that we kind of pulled are just some stuff that we felt was pretty top of mind or interesting to look toward as we're going into 2025. But when we look toward 2025, there's obviously a lot of other stuff that we can look at, and we tried to aggregate a lot of that content in terms of wrap up review stuff, state of where we are now, and then what we're looking toward for our latest quarterly report, affectionately named the weight of the evidence for 2025. You did a lot of work kind of putting a lot of this stuff together, taking content that we all as a team put together throughout the last 3 months. We won't go through all 18 pages. I don't think
We got
for
time, just like all the
we always have time.
yeah.
But what do you think were some of the most interesting stuff when you're kind of going through that report as we look toward the year?
Yeah, I mean, there's a lot of stuff. Some of the stuff we've already talked about in today's deal. The two that I think are worth actually mentioning in a little bit more detail. One, the January barometer, which looks at how markets do in January and then how that kind of translates over the course of the year. And so, we were talking about it before we jumped on, but you take a look at the January barometer, right? So how do markets do in January? And then you say, well, does that actually impact the S&P 500 over the year so far? And going back to 1950, there was 45 positive Januaries, 30 negative Januaries. The January barometer,
I can make, I mean, 66% of the time it's positive. It's kind of in line with a lot of market action.
right? Yeah, no,
Wouldn't have expected that, honestly.
yeah.
Yeah.
But in terms of it being right, so we think about like a negative January followed by a negative rest of the year, or a positive January followed by a positive year. It's right about 73% of the time. if January and the year in general are positive, so if January is positive, the year is positive 89, 80, 88, yeah, 89% of the time. So that's a pretty good bet.
So
Uh,
almost 90%. So if we're up at the end of January, and it's
right.
at least at the time of this recording, we're recording on Thursday, January 2nd.
We're
Not
down.
a good start. Started off well this
Right.
morning, 12:15 rolled around markets turn around the other way. But if we are positive in January, then 90% chance that we're going to be positive at the end of the year is
Yeah,
kind of
yeah,
what it's kind of what that
well,
reading says.
not 90% chance historically, right?
Historically, right. Not, yeah, every market environment's different, and we
Good
don't
call.
use past performance as not indicative of future results. But when you're looking at on the other side, so it's right, like you said, 73% of the time. It is, if it's positive, then it's right 89% of the time. If we're down, if
Right.
day one continues and January is negative, is that also 90% that we're down? How does that work out?
Yeah, so it looks like it's not quite as intense there. So we got the right hitting 73% of the time. It looks like I'm looking for the stat at this point. It looks like the
I'm gonna find it for
50%,
you.
there it
Yeah.
is. Yeah, yeah. So if we're down in the month of January, it's finished down 50% of the time. So it's a lower hit rate there. This makes sense, right? Markets go up
Yeah.
more of the time. So, if we're down in January, there's a lot of time for markets to still go up. So that the negative hit rate isn't necessarily as historically significant, at least from a hit rate perspective, but the positive is certainly.
All right. So if we turn around and we're up at the end of January, historical tendencies would point toward a positive calendar year. Now, with that said, historical tendencies would point toward a positive calendar year across just straight looking at the calendar years
Yeah,
too, right?
yeah.
I mean, but it is something pretty interesting to see that not often you see a 90%
No.
stat,
And when you
right?
do, it turns heads.
Right. And I'm glad it's not 100 because that would
Right.
mean it probably wouldn't happen.
Probably wouldn't be the case.
But yeah, 50% of the time, we'll see how that kind of shakes out. I've seen some other, I think some of the more um, recent deals, more, it's been wrong recently more often than it had historically. So I think the last 10 years have seen some pretty off shifts from that. Um, we'll see how that kind of shakes out
Yeah,
moving forward.
markets are just moving fast nowadays. I mean, everything, it just feels like you get like 15% correction, 10% correction, and then like a week later you're kind of back up. So things move fast.
Yeah, I mean, maybe it's just because everyone is in there reading the quarterly report stuff and they're just ready to take advantage of it, right?
I think so.
But
Markets are
when
so efficient.
I think it is very efficient to your point. I mean, whether it's algorithm trading, passive investing, whatever it is, it's everything seems to kind of once stuff gets rolling, it seems to kind of keep moving in that same direction. And we've seen a lot of that happen on the momentum side too,
Very nice
right?
segue. Yeah.
Thank you.
Yeah.
When you're looking at historical momentum performance, pretty good year last year, and what does that typically look toward moving forward?
Yeah, so we saw momentum at for proxy MTUM. That was up about 35% in 2024. In terms of the outperformance of the benchmark SPY there, about 9-10% or so. That was its widest margin since 2021. So very productive year, all things considered, for momentum, as it's really been able to grab onto the kind of extended bull market that we've had with pretty much consistent leadership over the last few years. Now, in terms of the next study, which is how often does that, or I guess what could that mean for 2025 and momentum? And interestingly enough, you run a kind of a performance or forward performance kind of test based on that. When the S&P 500 underperforms momentum, or I guess said plainly, when momentum outperforms the S&P 500, it continues to do so in the first quarter and the following year, 66% of the time, two-thirds of the time. So momentum has a bit of momentum as we move into the new year.
And that makes sense. I mean, the ball's rolling in one direction. You expect to kind of continue. I think that'll be interesting to see how that plays out this year, given we ended 2024 at a little bit of a rotationary time with
Right.
some of now, depending upon the strategy that we're following, the evaluation time frame, and what we're looking at to quantify the momentum look back period. I think it's questionable when that rotation started. But for some of the strategies, just started seeing some rotation out of semiconductors into some areas like financials toward the end of the year. And so it'll be interesting to see how that picks up as we move forward into 2025.
Yeah, I mean, it's always just a question of like, how legit, for lack of a better word, are all of these sector rotations? Because, it's not as simple as just, oh, the leader just actually wins every single day, right? Like there
Right.
are periods where leaders lag, right? And so if you see that, how bona fide is this rotation out of technology, right? A lot of momentum still focused on technology, but we have seen kind of that overweight dependence on the group to wane a little bit. So
Right.
how actually legit is this if we move into 2025, rates move higher, we see a flight back to technology, right? That would be, something to watch out for momentum, right?
Yeah, and I mean it's always the momentum trade is always been like was the change right, right? Did we
Right.
get on the right side of the trend? Is that trend long term? Is it consistent? And I think an important thing to keep in mind with any momentum trend following strategy, I mean, not every trade is going to be correct,
Right.
and most are typically wrong, right? You're looking for those big long term winners, and technology certainly kind of been that for a little while. We'll see if something else can kind of shake out into it, but it's in it for the process approach, not necessarily for a specific trade approach. I think it's an important thing to keep in mind as we move throughout the rest of the year.
Yeah, I certainly think so. What we'll do is we'll throw, again, we just talked about a couple of the quarterly report stuff. It's going to be in the description down below. This has been approved for, financial professionals, non-financial professionals.
General public use,
Yeah,
yeah.
general public use. It's aimed to be modular, so all of the topics, there's about 18 pages this year. All of the topics are one page. So, if you really are just interested in learning about Bitcoin, for instance, we got a page on Bitcoin. If you want to learn more about the January barometer or anything like that, go check that out. It'll be down in the description.
Cool. Yeah, we'll definitely put a link out there. You got a webinar coming up next week too,
I
right?
do. Yeah, we can also throw the link in there for
Yeah,
that.
we can. We'll have the link in the daily report for those that are subscribers and are following along. There'll be links to both. Will be plastered on the platform as well, that you can definitely keep an eye out for.
Awesome. Well, hope to see some of you all there, and appreciate spending the time with Ian and I today. Hope everyone has a great start to the new year. We should be back next week as well. Well, I don't know if it'll be you and me, but someone will be here
There
next
will be a
week.
podcast
Yeah.
next week. Yeah. Cool. All right.
Perfect.
Thanks, Miles. Thanks, y'all.
See ya.